Stock markets climb a wall of worry right into resistance. Can we bust through those all-time highs? This is technical analysis of the stock market's update and forecast trading strategy for the week of October 19, 2020. Traders, I'm Richard Graham. We're going to start out by taking a look at the S&P 500. This is the 1-hour chart, and as you can see, after we had been in this upward sloping channel for several weeks, we finally hit the top of that channel September 2nd, and we sold off pretty hard to the bottom of the channel, hesitated just a little bit, and then sold off to the bottom of a brand new channel that I drew in here. Couldn't get to the top of that channel, so we hesitated, came down, and created a new channel, and that's the channel that we've been in for quite a while. As you can see here, here's what happened at the beginning of the week. Drill it down to, say, the 15-minute chart. And so we gapped up here on Monday, and we finished the week pretty much where we left off on the previous Friday. Just a tad, a couple of points higher. So we gapped up Monday, we went up to the top of the channel, and then we sold off all the way until Thursday morning. We had that big gap down, and a lot of people were nervous about that, but as I had said in my previous video, that was a key level of support. As you can see, we had hit that here on September 16th. We hit it here as resistance again here on October 6th. So I knew that was going to be support, and sure enough, as soon as we gapped down on Thursday morning, it was great support. If you were able to get in on that, you could ride it all day long, all the way up into resistance here, and then we kind of had a sell-off at the end of Friday afternoon. So here on the daily chart, you can see we are in a bullish trend and have been ever since this low here on September 24th, with higher highs and higher lows. Now, we do have some resistance that we're coming right up into. And so when I started the video, I said we're riding up a wall of worry, and it's because we have a lot of issues that people are thinking about right now. One, the uncertainty over the election, the stimulus plan that we really can't seem to get past, even though the Fed chairman is testifying that we need it really bad for the economy. The vaccine has come into question about the timing of it and the pause and when that might be coming out. And then, of course, the new cases that are coming out and whether or not we might have a second wave if things looks like things might be increasing on that front. Also, the unemployment rate came out, and it actually came out worse than expected. So we are climbing this wall of worry, and we are coming up into some significant resistance. This red line right here is those all-time highs right around 3,600. We are in an uptrend at this point, and we should expect that it will continue in that direction until it reverses and until we start seeing lower lows and lower highs on the smaller time frame. So if we drill it down to the 30-minute chart, one scenario here is that we gap down here on Thursday, and that was the beginning of this new downtrend, and this is just a retracement, and then we'll come down from there into some new wave to the downside. Now, if that happens, that means we're going to break this key level of support right here at about 34.35. That could bring us down to the bottom of this channel, this white line right here, where we have some support right around 3,400. The next major level of support would be at 33.24. If we do have a break here, some people will be looking for an opportunity to get short. However, we need to break this level of about 33.25 before I can say that the bears will be back in charge. Because if we go back out to the daily chart, we see that this price level is quite significant. 33.25, hit it and acted as support several times, and then when we got back above it, we should expect it to act as support again. The next level of support below that is right around 3,200, and that's the level that acted as resistance in June at that famous island reversal pattern that we had such a hard time getting above. So keep your eye on those key price levels of about 34.35 for support and just shy of 3,600 for resistance. Buy at support, sell at resistance. Like I said, at this point, we're in an uptrend, and we're above all of the major moving averages. Let's take a look at the Nasdaq, the triple Qs right here on the daily chart. We hit the top of the channel in early September and sold off, and now we've come back quite a bit and retraced quite a bit of it. We're still above the 200-day moving average way down here. We're above the 50-day moving average, the 20-day moving average. They're all sloping up, so this is a bullish trend, right? We hit this low right on September 21st. Now, we broke through several levels of resistance resistance on the way up right here at 275, and again at 283, and then we broke through 289. Then we came down below that key level, came back up above, and now we've closed back below it. So it could be that we're starting a new downtrend in the market. However, it's too early to tell because we've still got all of this major support right here at this key level of 283. So as long as the bulls can maintain price above this key level, I'd still be bullish as well. We've got this trend right here, higher highs and higher lows. Nothing's been broken. The Q looks just fine at this point, although we will be coming into some resistance again when we come into these all-time highs right around 303, or possibly at the top of this trend line that could act as resistance, depending on where we hit it, somewhere just above 300. At this point, though, we're still bullish the Qs. Here's the Dow Jones Industrial Average. We have several levels of support. We have higher highs and higher lows here on the daily chart. It does look like this could be a reversal candle right here on Friday. However, it's still too early to tell. We've still got major levels of support. Still bullish on the Dow. Here's the small companies, the IWM, the ETF fund for the small caps. And as you can see, I still got my lines drawn in from the last video. And I said if we come down to this level of support, we might bounce off of it. And that's exactly what we've done. Now, we've got some short-term local resistance right here at about 164. And so we want to break through that. But the small companies have been doing quite well. Here we are on the 30-minute chart. Quite a bit of support right there that we bounced off of. So as long as we can stay above that level, I would say that we can still hit those all-time highs of right around 169. Now, here's the VIX. This is the fear index. Here's the big sell-off we had in February and March. And as you can see, it's inverse to the stock market. So the price of options go up when the stock market goes down. We had this spike here in early September. And one thing that I find really interesting is that we've been holding this level of support. We just can't seem to get down below it. So that means that we do have a level of fear. You know, normally in a bull market, the VIX is down around 10, 15. When we're above 20, when we're above 25, that's time to be concerned. And when it breaks above 30, then you know we're probably in the sell-off mode. Look at this. We've been bouncing between 25 and 30 for quite a while now. Like I said, we had this sell-off in September, came back down, and we've been coiling up in this range. Now, usually when we get into these downward sloping wedge patterns, they often result in some type of spike to the upside. Now, when it does spike to the upside, often we have a sell-off in the market as well, because that means that the price of options are going up. And the fear index is what they call it. We've still got mixed signals coming from the VIX futures term structure. We've got a bit of contango at the beginning of the curve. Out at the end of the curve, we've got backwardation. So mixed signals, both bearish and bullish on the VIX futures term structure. Now here's gold. As you can see, we're still above this long-term upward sloping trend line, and then we hit the peak right here about August 7th, and then we came into this consolidation area. Now if we zoom into the 4-hour chart, we were into this consolidation area, and then we broke down below it. We were in this triangle, and then we broke down below it, which was bearish. We hit the bottom of this other long-term bullish trend line, and that acted as support. Now we're coming up into resistance, which is the bottom of this consolidation that we had in late August and early September, and that's acting as resistance. So we're still coiling up even more. We're in this other wedge pattern. So we were in a wedge pattern here, and then we came into another triangle wedge pattern here. So you see we have this line of resistance here. We've got this line of resistance. See, it bounced down from. We've got all of this long-term support here. So the overall trend for gold is up, but however, we do have all of this resistance, so I wouldn't get long until we can get above at least this level, and then we have this level here, and then we have this level here. So if we can bust through all of that and get above 1975, then we're off to the races again, because we have, just from a chart pattern perspective, we could have another big move to the upside that it measures from, say, here to here. You could take that measured move and say, move it from there to there. So if we get that measured move, the first level of resistance might be right around 21.25. However, if we break this major support, it could bring us down to this level of support at 1844, or this level of support, which would be right around 1750. And for silver, SLV, the ETF fund for silver, a similar situation. Long-term uptrend, still holding above this long-term upward sloping trend line. And as you can see, we've got this major resistance line right here. We're going to coil up into this triangle, and we're going to see which way it breaks. If we can get back into here, we can go through a trading range and trade back and forth. If we break down below here, we don't really have a lot of support until we hit at least about 18. Here's Apple. This is one of the stocks that really drives the market, of course, major cap-weighted stock. And here's the big run-up that we had leading into the sell-off. We hit this major support trend line, and we've been holding above it. Now, in my previous level, I said this area of resistance, if we broke through it, which we did, we'd come back and retest it, and that's exactly what we're doing right now, an opportunity to possibly get long. However, on the short-term time frames here, we are starting to come down into that level. Now, if we break down below it, we've got this next level of support. But, of course, all of the trend lines and all of the moving averages are still pointing up, so it's still bullish Apple at this point. Here's Amazon. As you can see, we had quite a sell-off. Look at this candle late on Friday. Came down to this level of previous resistance acting as support. We'll see if it holds. If not, it could come all the way down to this next level of support right around 29.65. If that doesn't hold, we got more support down here at 27.80. And then the next level of resistance is going to be these local highs right here, right around 34.90. Here's Microsoft. We did break that upward sloping trend line, and now we're coming back to retest it on the downside, and it looks like it's acting as resistance. We do have this level of key support that it's holding. If we break this level, we could come all the way down to the next level of support, which would be right around 205. Here's Google. We did break the upward sloping trend line. Same thing. We're trying to come back and see what happens there. We're trying to get back up to those all-time highs. We did bust through this area of resistance right here, and we do have some support down here. So still bullish on the short term on Google. Here's Facebook. Of course, we broke the upward sloping trend line, came back and retested it, got rejected, and now it looks like we've come down and broken through this support line. It's possible that we could sell down to the next level of major support at around 250, 245. Here's Tesla. They're going to report earnings later this week. And then we've been coiling up in this triangle pattern for quite a while now. Generally, these type of patterns, when they're bullish like this, do break to the upside. And it looks like that's where it wants to go. So earnings coming out on the 21st. If it breaks down, we could see quite a sell-off in Tesla. If it breaks up, we could see a measured move similar to the one we had here. And that could possibly take us all the way up to 660. Here's Bitcoin on the 4-hour chart. We broke through, came back and tested that resistance. And look at this. We've broken through it. Higher highs and higher lows on Bitcoin. We do have some local resistance here at about 12,000. If we break through that, the next level could be all the way up here at 14,000. Here's TLT. This is long-term government bonds right here on the daily chart. We have been coiling up ever since all the volatility in the springtime, coiling up, and we're going to try to break out of this possibly this week. It looks like it wants to break out to the downside. If so, we have support at 153. If we head up from here, we do have some resistance right around 167. Now, here's the DXY. This is the ETF fund for the dollar, and as I keep saying, keep your eye on it because if the dollar shoots up, we could have a big sell-off in precious metals and stocks. Generally, the dollar has been inverse to the markets. So all of this previous line of resistance, we did break through, and now it's acting as support. So we still have that scenario where we could shoot to the upside. The dollar showing some strength. If it breaks down below these levels of support, they will act as resistance. So keep your eye on the dollar. Headline trading risk this week, Monday morning, Fed Chairman Powell speaks at 8 o'clock Eastern. Then on Tuesday, it's building permits. Wednesday, crude oil inventories. And then on Thursday, it's those initial jobless claims and existing home sales. Don't forget to check out the links in the description. You can get real-time trading alerts, 12 free trading lessons, and access to 7 free videos, and information on how to become a funded futures trader. So that's the picture, guys. Stock markets are bullish, climbing that wall of worry right up into resistance. If you like these kind of videos, make sure you hit the thumbs up. And if you haven't already subscribed, make sure you do that too and hit the notifications bell. That way you won't miss my next video. Have fun trading this week, guys, and we'll see you next time.